Hi everyone, it's Stuart here. Hope you can hear me loud and clear. It's another NFP day, non-farm payroll. It's US jobs day today. So let's see what the numbers will show us later on. We've got about 10 or so minutes before the actual live numbers come out. So as usual on NFP day, lots of volatility. We've been very quiet this morning. Main pairs have been in quite a restricted range. We are expecting a fall in unemployment. Headline is consensus about 1.4 million new jobs being created for the August payroll number. So here, remember, today's is the second last NFP number before the election on November the 3rd. So it'll be closely monitored by both parties, obviously the president and his rival, Mr. Biden. So watch those. Good evening, everybody. Hope you're well. Hope you can hear me loud and clear. I assume you can. Unemployment is expected to fall, but there was in this time period where they're counting the data. There's been a restriction in some companies furloughing again, unemployment going up as well. In that period. So we'll see how the numbers come out. A big key number today. Remember the last couple of events, the president's taken the opportunity to have a press conference immediately after it. We'll see if that's run today. I didn't think he would last time, but he did. So 1.4 million's headline. Unemployment down to 9.8%, so under this psychological 10% as well. But the other one I look at as well is the U6 unemployment, much wider measure, and that's sitting at 17.3% for last month as well. So, expected to come down to 17.3%. So a key indicator for that as well. Let's have a look, see if there's any more chats. No, there's not a lot of chats. Let's go. I'm toggling between the chats. So let's have a quick look at the charts before we get going. This is this is dollar CAD. Remember, the Canadians have their data out as well today. So the Canadian unemployment rate is expected to come down again to 10.1%. Net change for payroll is expected around 275,000. Remember, it was a massive, over 400,000 last time. Big surprise last time for the Canadian Canadian payroll data. Participation rate 64.4%, and the important IV Purchasing Managers Index expected to slip to 57.45. So we'll see again how the Canadian data comes as well. So dollar CAD here on the current 15-minute chart. You see how we slipped down here. As we run into the payroll number. Again, here the 15-minute chart's been short since about 10 o'clock this morning. That's been under its 20-period moving average. Consolidate. There we go. Trended down, retraced up, sideways, trended, and then we moved down. Bit of consolidation down under the 200-period moving average. So regardless of the time frame, have a strategy, trade your strategy, and let's have a go. Amir here is saying about gold, sell gold. Well, gold has we've had a very volatile, obviously, session yesterday. But for me, just before the numbers come, I've got 5 minutes. Let me run through my thoughts on the gold market. We had this massive sell-off a few Tuesdays ago. This worst trading day for gold in 7 years. We had this big sell-off, and key thing for me, then we went down the following day, spiked as low as here as 1865, a key support level on the daily time. This is a daily chart on gold, everybody. So then, since then, we've really just been consolidating, but at highs. We've got a key support zone at the moment. Obviously, nothing lasts forever. Between 1920 and 1900, so there's a nice cushion here for the gold market on the daily time frame. Where buyers have come in here under 1920 and taken the price back up. But what we can't do is actually break over this 50% Fibonacci level of this big sell-off that we've had from this high up here at 2075 to this spike low here at 1965. So the 50% retracement level of that sits there at 1995, and we haven't been able to break over that and close over that on the daily time frame you see here. And since these two sell-offs is, engulfing, all this action is within this big candle, so it's all been engulfed by this big candle here. So we're looking to want to break out of that area. So we're still sort of consolidating in that area, my friend here on the daily time frame. So end of day traders are waiting for this channel to break either over here to the upside, and we might rally and test the low again, the highs again, or we break below 1900 and then we run lower through 1865 and then down to this last congestion level here at the middle of July, which takes us down to the 1800 level as well. So that's where we are on the higher time frame. In my view, obviously intraday is a bit more obviously volatile. So let's just go down. 4 hour has been drifting down all week here. This is obviously week marks the beginning of the month. So here, beginning of September, we rallied up here to 1990, and then we've just been moving down ever since. The 4 hour candle really went short here on the second. That's been moving down since. But again, support on the 200 hour or the 200 period down the 4 hour at 1930 for gold. 1 hour, obviously a bit more volatile, and we're just consolidating, going sideways. Lots of questions coming in here. Lots of questions about buying or selling gold. Well, let's see how we go. Aussie LP Tech tells me, is Aussie a buy? Well, Aussie and the higher time frame, my friend, this is the hour time frame, since the strength that the dollar's seen in September, we've moved down, rejecting 74, under 73 here, and testing 72.50 this in early trades on the Asian market this morning. So bouncing and we're capped here, as you can see the pivot point. See that line there? That's a pivot point. It marks also the top of the Bollinger Band today, and also the 200 period moving average, the intraday one. Obviously, everything just sort of waiting for the key data of the day, which is really obviously the NFP, which is out in a couple of minutes. But at the moment, that's sort of consolidated. The higher time frame, that remains relatively robust here. The Aussie still above its 20-day moving average. It's there at 72.30 on the daily time frame. LP, my friend. Lots and lots of questions about gold, CAD as well, dollar CAD. So we'll have a look at those two. Dollar CAD says, is it a buy? Somebody else saying, is it a gold? It's not a problem. Interesting comment here. Is in a descending triangle. Do you think NFP will push it lower? Dollar yen. Let's have a look. Dollar yen. We are again on your time frame, my friend. Daily time frame remains sort of consolidating bit. Both of these currencies obviously got other things playing on them, as well as just the technicals of the economic data. Obviously, the key thing in Japan is that Mr. Abe, the Prime Minister of 12 years, resigned earlier in the week, and obviously not early in the week, but last week sometime. So they're looking to replace that very, very quickly, actually, within a few weeks. So we'll see how that pans out as well. That's playing in the background for Japan. But as far as this daily time frame is concerned, we're really sort of bouncing around a bit, consolidating. But we're capped, as you see here clearly, all of August. We were capped here at 107. And we also tested, remember, just at the end of July, all the way down here under the key psychological 105. So 105 for yen is very, very key. I'll come back to that in a minute, Pleshkas, if you don't mind, and we'll have a look at somebody say gold is a strong buy, says my friend. Right, so the data should be out, if not now. Let me have a quick check. So let's run through the data. Let's go back to the headline. Let's go back to the euros. How the euros work. Well, euro dollar is moving down immediately, so it's relatively strong for the dollar as far as the market's concerned immediately. So let's just run through the headline numbers. Average hourly earnings much better than expected, coming at 0.4%. Consensus was a flat 0, so that's a big beat. Unemployment rate is down much more significantly expected. It was 10.2 last month. It's come down to 8.4. It was expected to, only slip 0.4 of 1% to 9.8. It's slipped, and it's moved quite significantly, 1.8% to 8.4%. So it's a big headline improvement in unemployment. U6 unemployment, that one I talked about earlier, that was expected to sit at 17.3% and actually move up from 16.5%, is at 14.2%. So unemployment has sunk quite significantly. The issue will be the quality of the jobs. But the earnings number, again, is ticked up. So we're flat at 4.7%. As we were last month. Last month has been revised down just a tick to 4.7%. So the annualized average hourly earnings is sitting there at 4.7%. A lot of this might be to do with there's been a big recruitment for the census in America for 2020. So there's a big lump of government employees in there. However, the headline number, which we're all looking for, it's coming at under the 1.4 million. It's coming at 1.371 million. So we got a beat for the headline number. It was expected 1.4 million. It's coming at 1.37. It's actually showing here as red. That's positive. And the unemployment number is much better than expected, 8.4%. So I would expect a President Trump press conference later on, either from the lawn or certainly his main advisors will be out. Larry Kudlow certainly be out up on Bloomberg and CNBC and other advisors as well. So 1.371 million for the headline and unemployment 8.4%. The participation rate, I've missed that actually, participation rate has also gone up 61.7%. So the impact of the recruitment for the census is, obviously I haven't got the details here in front of me on this particular workstation, but that'll be something I'll be looking at after when we finish our session here now. That's a relatively strong set of NFP data, and if the next month it comes in line with this should be relatively good for the economic argument that the president has for his re-election purposes. Just run through the Canadian data as well, and let's just bring up the dollar CAD chart as well. So that's dollar CAD here on the, let's go to the 5-minute chart. You can see that's sinking here. Actually, it's chopping about the usual volatility. So we've tested 131, come back down for that. And we've tested as low as 130.75. So we've got a 25 pip variance on the dollar CAD. Headline for the Canadian dollar is unemployment rates ticked up, in fact, at 10.2%. It's down from last time, but it's worse than expectations. And the net change in unemployment for Canada comes in at 240,000, or nearly 246,000. It's not as good as expected at 275,000. Participation rate is flat at 64.6%, and the Ivy purchasing managers is still an hour or so away, but that's another key bit of data for the Canadian economy. So let's just recap on the NFP number. Headline is 1.371 million. If that's correct, that's looking, I don't know why that's coming red on my terminal here, but unemployment down quite significantly. So there we go. Let's have a look at what we're saying. Stuart, please buy a condenser. Please buy a condenser. I don't know what you mean now, my friend. Imran says, how's a position in gold? Let's see how gold's reacted then. So actually, let's just run through the main crosses first before we get to your request. So let's have a look at this. So we had obviously immediate sort of volatility in euro. Euro went down to 118.25. We rallied to 118.54. So a big 30 pip range there in the euro, both down and up. It's not yet making its mind up here on the 5-minute chart. Obviously the data's only 5 minutes old, so we've had a lot of volatility, but we're tracking lower generally here on this 5-minute chart, and the bias remains under our 5-minute 20 period moving average at the moment, but we'll see how that tracks out further. So dollar yen on our 5-minute chart, it's been dollar positive, the headline and the unemployment rate. So 106 has held all day, and here we are 106.33. So 15-minute chart, see we've been tracking up. Yeah, we were very much sideways there at our pivot point here, 106.23. So we're rising above that. Our first resistance sits there at 106.48 for dollar yen today. Cable, you'd expect a similar sort of move. So cables can't, that's the 1 hour. That's not good, is it? So look, cable, not quite sure. So it's been losing momentum for most of the afternoon. Cable, we went over our nice little, fractal high there. Rejection, our classic little shooting star there on that 15-minute. Then big candle breaking under the 200 period. Classic little move down. Broke the 20 period there, and we tracked down. So here we are, 132.60. The lows of today so far. We tested once, twice, 3 times down. We're moving below that. So 132.60 at the moment. Dollars received this news very well. Aussie, that's been relatively weak as well. This is the daily chart on the Aussie. And you can see we've been moving down all week. That's, I would guess, a 15-minute chart. Yeah, also moving down. Similar to the pound there, moved up to its pivot point at 72.90 and continues to move down. So anyway, let's run through those. So gold, there's lots of questions coming in here. So gold, let's have a look at gold. What's gold happened? So gold on the 1 hour. Let's have a look. Gold. 15 minutes. That's a quite old move on gold. Gold went to 1949 and we were as low as 1927. So big variation. That's quite an impressive move on the gold market. Quite unusual for NFP day, to be honest, but certainly been waiting for some action. This is the 15-minute chart for gold. It remains capped here at the R1 level at 1946.88 on gold, Imran, and the key 200 moving average there on the 15-minute. It's the 30-minute chart. So key resistance there coinciding with that 200 period moving average and the daily R1 level. And we're now currently under the pivot point. So pivot point we've literally, as we say, been pivoting through that all day today. It's been support, but here we are underneath that. So that may be trekking lower. The hourly chart, yeah, it's taken us lower at the moment. Obviously, there's still 20 odd minutes on that chart to go. The day low for gold so far sits at 1925.85. So that might be tested. Remember that 1920 level we looked at on the daily time frame. So have a look at that, Imran, as well. So moving lower. Lots of questions today. Nasdaq is a good choice for a long time frame. Well, we had that massive sell-off, Sergio, and other people are asking about that. Nasdaq. Boris is saying buy Nasdaq. The S&P. I'm sure I've got it here actually. I need to go to a different chart. But certainly the big tech sell-off yesterday. Talk about tech Mengdon. Tech bloodbath, but remember, we've been grinding up quite significantly. So, let's have a look at the indexes for you. Index charts here. This is the daily time frame. We've been going up and up and up since Nadia at the end of March. Nobody's complaining. Top half of the Bollinger Band. Thank you very much. And a big sell-off yesterday, but we're still above our 20-period moving average. Tested it 3 or 4 days here, back at the end of July, and it looks like we're going to be testing it again here at the beginning of September. So key support for the USA 100 and Nasdaq 100 is the 20-day moving average at these high time frames, guys. Here at 11,600. So big psychological 11,600. Huge sell-off yesterday. The momentum is perhaps twisted. The parabolic SARS turned yesterday. It was a big sell-off. First sign of it was here. We've got a fractal high pushed in probably on the close today here, or from Wednesday at 12,500. MACD still looks relatively okay. The histogram now is signal line. Histogram is under the signal line at the moment. Possibly moving down, but the trend remains pretty robust, doesn't it? Some people that were bought in this last leg up here at the end of August maybe panicking with the big sell-off yesterday, or indeed they may be just cashing in from these big moves up end of the summer, beginning of September. Remember, Monday is a Labor Day in the United States. Is a key holiday. And typically the markets get back to, in a normal year, obviously this is obviously pandemic impacted year, so it's not normal, anything but. In a normal year, the period after Labor Day marks like the beginning of the final session of the year, if you like, for trading markets. It's the last 3.5 months, 4 months of the year after Labor Day. Everybody's back to normal. Schools are back open, universities are back. Everybody's back from their summer holidays in the Northern Hemisphere, and volumes start rising quite aggressively into the end of the year. So that's a key day. So will we get a further sell-off today? Who knows? Will we get a bit of a retrace from Thursday's sell-off? Again, who knows? But remember, it is a holiday on Monday as well for America, so we could have a big bounce back on Tuesday or a further follow-through on Tuesday. nobody knows. And if somebody tells you they do know, treat it with a big pinch of salt. But as far as the Nasdaq are concerned, Sergio, tech stocks, long term are, they've had a very, very good run. If we took this up the monthly chart, look at that. This is 1, 2, 3, 4, 5 consecutive month high here for the technology stock. Very, very steep rise. Out of its Bollinger Band here on the monthly chart frame. So you'd expect probably a bit of retrace from such a steep rise. But if it comes down as quickly as it's gone up, maybe, who knows? Again, nobody knows, but you would expect a bit of a cooling. Nothing goes in a straight line forever, but we've had a phenomenal 5-month run, particularly with the tech stocks. But the issue with the tech stocks, and it obviously impacts the other markets, not just the Nasdaq, is the fact that that they're weighted by these big companies: Amazon, Facebook, Microsoft, Netflix, and all the 5-6 big players, Microsoft, and they have a massively disproportionate impact on the indexes. Those 5 big tech companies, they account for over 23% of all the market capitalization of the more important S&P 500. So the S&P 500, the other 495 companies account for something like 73% of the weighting of the index. But here you can see the S&P as well. We're only talking about the 100. Again, testing that 200 period, but still looks relatively robust on this rise through July. This is the daily time frame. Again, we take it to the high time frame, so it still looks pretty solid, doesn't it? New all-time highs. But are they getting frothy? Are they getting too high? Traditionally, September and October are very volatile months. September can be, one of the worst trading days of the entire year. Takes place on the 26th of September. That's a big historical thing, and markets tend to repeat themselves. So there we go. So strong payrolls impacting our futures here on the equity markets before they open in 45 minutes. So generally, if I drill this down to the daily time, we've had a big sell-off yesterday and sort of chopping around at the moment today. I'm not sure where we're going. But Sergio, it's obviously your call. Is it a good choice for a long time frame? Certainly the futures technology, the technology companies, tend to get, when they go public, they get registered, tend to be on the Nasdaq and let's have a look. The weekly, so it's been a very strong recovery from these lows down here at 6,700 in March. Big sell-off again. See how the sell-off comes down very quickly because of the pandemic panic, and then we relatively grind up. But this is, it's been over. It's been creating all-time highs here from the sort of end of May. So June, July, August, Nasdaq 100 creating all-time highs as it's moved forward virtually on a weekly basis. So you would expect some sort of cooling of this massive rally and some sort of perhaps realignment of positions. But because of the pandemic, the tech companies like Zoom, like Amazon, have all done very well. Like Microsoft with Teams and Zoom with their obviously online video conferencing meetings. Very, very good. There was a massive rally in Zoom, 40% on Tuesday, and their stock price came down 10% yesterday. But all this pandemic creating opportunities all over the place. So here we go. Nasdaq on the way up. That's right. There's lots of questions coming in here. That was Nasdaq. Boris, I'll answer your question about Nasdaq. He's a hold. He's saying. Diego, is sterling a buy or a sell? Again, guys, put your time frames on because things can be different in different time frames. But sterling has certainly been on a relatively good run, and if I just actually you wanted to let's go back to the intraday stuff. Sterling and cable in particular has been on quite a good run because of the weak dollar we've had. Obviously, September's been a good start. The dollar's retraced quite well. But in the higher time frame, sterling here is sort of chopping around daily time frame here. So this is this is a short 1 hour time. Excuse all the lines, but you can see generally sterling, as you can see how it's moved up. It's been moving up from these July lows down here at 123, 121. Here, remember back in May we were all the way down here at 120. We went 114, but recovered quite well and continues to move up. So we've capped at 134 cable, Diego. And last week, as I say, things have improved for the dollar, and we've moved down, but not as much as some other crosses. So sterling still holding over 132. It's under 133 today. If we move down, you see this is the 1 hour time frame for cable. This is Monday, Tuesday, Thursday. No, this is Tuesday's high, wasn't it? 130. We couldn't get to 134 again, and we've just been tracking lower all week. So the 200 period here on the 1 hour has come up to meet our 20 period. So we've got a bit of a squeeze here around the 132.50 zone. So that's the area we're looking at. And we're currently trading at 132.60. So again, a bit of a channel there. As far as today's concerned, support sits there at 132. As I mentioned earlier, 132.25. And then the psychological 132 itself. So still no clear direction there for cable, although it's been down for the last 3 hours. We've still got 10 minutes before that chart closes. So technically, on this actual trend following strategy, that would have closed your short out, but trading this on, and technically that would suggest we're short, because we're under the 200 hour, zoom out, we're under the 20 period, and we're under the 5 and the 9 just crossed. So that would have triggered a short trade here at 3 o'clock, at the top of the hour, 3 o'clock my time, on this 1 hour time frame. But as you can see, the moving averages aren't really sloping. That's what you want from moving average. You don't want to go sideways because you get chopped in and out. So you'd be eyeing to perhaps see if this floor here, this 130, see where we are from yesterday. Yesterday's low here was 132.40. So a break of that, we pitched into it as NFP came out, but we bounced off as well. So but we're tracking lower. So a break of that might take it lower into the S1 and then perhaps test S132. So say technically on a 1 hour time frame, it was short at 3 o'clock, and that's taking you down. The ATR on this is about 23 pips for cable, so that's a possible move from 3 o'clock short. It's selling now because of the news. There we go. That's fair enough. Ogle Ken, it makes absolutely sense. Emmanuel, sell gold. Okay, well that's your view. That's fair enough. Euro, dollar, sell. Well, again, it's all about time frames, guys. Look, obviously the volatility of NFP, you get opportunities on both ways. But as you can see here, this is a 5-minute chart for Euro, Chico, and you can see it's really been moving down from this high at 12 o'clock server time here, which was touched around 1863, and then we've lipped down. So as you can see here, even in 5 minutes, the highs are getting lower. So that's suggesting we're moving down, and the lows are also getting lower. Obviously, big volatility as the numbers come out, went down under its pivot point and bounced back up so far. So S1 is our support at 118.05, and then it's only 5 pips above 118. So we tested 118 yesterday. We tested back up at the daily time frame. So yesterday we tested into 118 and bounced off it. So the daily traders are short. No, we're not actually. We're not actually under. Again, it's another flat one. So not a lot of action. That's a sideways action on the daily time frame with 118 spot. So there's no direction there for trend traders. Range traders are certainly probably selling at the top here at 1965. Anything under 19 going short, and anything above 18 trying to take long positions as it's bouncing in the channel on that daily time frame. Intraday stuff, obviously it's NFP, so we're all over the place, but it's generally edging down there. 1 hour time frame again. 1 hour was under the rising 20 period, so 20 period moving average there, so it's sort of edging down. So again, that's edging to the downside. Check out. Where are we? Right, let's have a look. Lots of questions coming in here. What about weekly vision, Romeo? On what time frame, my friend? Eric, Euro, Yen, sell. Let me just check I can't see any more questions on YouTube. I've got my YouTube questions coming up. I can't see it. Guys, if you're on YouTube, I can't see your questions for some reason, so I apologise. I don't know whether that's a YouTube problem or our problem, but I apologise about that. Richardson has asked about euro yen. So let's have a look at euro yen for him. There we go. Where's euro? Euro crosses. Euro crosses. Euro crosses. Okay. I'm being told that I can see your question, but I can't actually see anybody. Live chat, all your messages I can't see. No, it doesn't want to let me. Let me just try that again. Right, just bear with me a second. Chaps, sorry. I'm going to try and have a go to get my friends on YouTube so I'll see their questions, and I'll get to your euro yen question as quickly as well. There we go. It's funny, I'm actually seeing these questions, I think. Yes, I am. Because Billy's talking about gold down to 1860. That's a key support, that, Adam. I am actually seeing them all. Yeah, there we go. I can actually see them on here. So obviously that's the red that's YouTube, isn't it? So I can see. That's interesting. I can see YouTube questions, but not. So I don't need that. Not Facebook questions. That's very strange. Right, where were we? Where was I? Eric was asking about. Not Eric. It was Richardson was asking about euro yen. Euro yen. Where's euro yen? Let's have a look. I'll tell you. There we are. There's my euro yen. First, let's just tab these. So. I do this all the time, so you get a feel for what's going on. Get them all on the same time frame, and then it gets a general feel of how strong. So Euro Aussie's been down, Euro CAD's down. This is the daily time frame. I always start with the daily time frame. So it's generally down against the Euro. Euro Aussie's down, Euro CAD's down, Euro Swiss is sort of sideways. That does that a lot of the time. Euro Pound is certainly down. Euro yen is actually moving up, but not actually. That was the one we're going to look at. That's sort of moving up against the fray, so that's a weaker yen, but that's because we've got a weaker yen generally. Euro New Zealand's down, and Euro dollar on the daily time frame, it's sort of sideways, isn't it? So Euro yen, Richardson, here on the daily time frame, it's been strong. We've had a very strong July. Sorry, what time frames? This is the daily. What we're talking about? Yeah, July, August, strong, up, euro over 125. Key psychological number again. Remember, 5s and 0s very, very key, and we're up over that. We've rallied, dipped to it, bounced off it again, and so it's doing that sort of thing. So what's this telling me? Right, what we have here for me are two fractal highs. Interesting, the second one's a bit higher than the first one, but we're running out of steam. So 125 is key because it's a big, round psychological number, and that's where we're doing. So what we can't do, so let's put this in. So our closing high for the day for Euro Yen is around 126.40. There we go, that one there. So 126.40 is our high, and 125 is our support. So we've got 140 pip range we're in at the moment, and we're testing this 20-day moving average. So as we run out of steam going up, you can see how the moving the Bollinger Bands have started to close together. We're having a bit of a pinch there, or pinch from the top but not from the bottom. The wideness, the volatility has taken us up, has cooled down. We're still above the 20-day moving average, but we're like really smacking into it, aren't we? So 125.70, where our 20-day moving average is, we're smacking into, and it's just about holding it. So for me, we've weakened in September, the first 3-4 day trading days, so 3 days down. So Monday was a big day, and then we retraced most of them. Look at that, we retraced most of the big right. So that looks like a high, end of the month, beginning of the month, 126.40. We can't close higher than that. So it's a big line in the sand for me, Richardson. So that's moved down. But are we going to go lower? Only if we break this 20-day moving average. So it's a wait and see, my friend, up here on the daily time frame. I don't know what time frame you're looking at, but there's lots of questions, so I'm not going to. If you don't mind, we'll come back to this if we get some more requests. Now then, I've lost where am I? Gold. Richardson. Next was Faith asking about the US 30. So we had a look at that a minute ago, didn't we? Interestingly, In the big sell-off yesterday, the USA 30, the industrial companies in the United States, did less badly than the big. Obviously, it was a big tech sell-off in particular. Did less badly than the S&P 500 and the USA 100. So we'll see that it lost. Let's go back to this one. It lost momentum, obviously, but it was less worse than the other two equity markets. It's interesting. It's an interesting chart. What's that one on there? What I'm looking for. USA 30 was the question. Again, Faith, I don't know what time frame you're interested in, but this was yesterday's huge sell-off, and then we bounced today. So at the moment, on this 1 hour time frame, we found some support through here, really. I don't know where that's come up. Really through here. So 28,160, bit of support, really. And we're sort of edging higher, but we need to break over 28,500 today if we're going to move this up. Remember, we breached 29,000 for the first time in a long time the other day. My platform was playing up for some reason. Let me just put 29,000 in there. There we are. 29,000 we'd breached. Delete 1, 2, 3, 29,000. So this is the daily. We got up there earlier in the week, and then we shook out yesterday quite significantly and went bouncing. So again, another one. If you zoom this up, another one. Tested the 20-day moving average yesterday. Tested it again today. So far on the futures, but it's held quite well as on this rally up, isn't it? Is this the beginning of a shakeout? Who knows? As I say many times, September is a notoriously volatile and potentially weak month for equity markets. But as I say, the S&P, the USA 500 has performed. USA 30 has performed better than the other two yesterday in the shakeout. Wasn't as bad, but so this daily remains still sort of bid. Again, depending how you were trading this, I mean, you could have, if you'd been trading this with this crossing EMA strategy that we teach, you'd have been long from here as we've gone over the 20 period. You would have still been, you'd have been long, you've gone long there, and you would have been long, you've gone short, you've closed out there, you've gone long here. So you'd have been long from all of August, because we haven't closed under the yellow line here, so this is more long positions, so long, out, long. So we'd have got all of that and then closed out yesterday, basically. So you would have gone from here to here. So a nice big gain for you. You missed out all this 29,000, but you know, rules are rules, and that's what happens when you trade that. But big, see how big the candle is. This is what was interesting yesterday. I can't zoom up anymore. See how we've got a nice tweezer top there, which is a bearish sign. Here we've got the wicks at similar height. We've got a white and then a red candle. This candle yesterday engulfed the previous day, so Wednesday and Tuesday completely engulfed in the action. So the last two big up days, or the last two solid up days, pretty big candles as well, weren't they? Engulfed by Thursday's sell-off. Also, previous day completely engulfed by this previous candle. So Thursday's candles engulfing all of this previous action. Okay, so as we're grinding up slowly for the final 1, 2, 3, 4 days, and you can see there most of the fifth day, in fact. So those candles there, 1, 2, 3, 4, 5. So the 5 last candles moving up overall. Yes, we had one down day out of those 5. Were all encompassed by yesterday's sell-off. So that really is where we closed yesterday is that key level, that 28,400 or 28,360 here is that key level. Because this is, you could argue, we don't know yet. This could be just a big blow off of the final sell-off, but we don't know that because we're still going up. Okay, and you know it's all about what your system says, what your strategy says, when to sell, when to rebuy, or whatever. You know, the 50-day moving average all the way down here. Lots of people use that as their key barometer. So that sits at 27,150 for the for the USA 500, which also happens to be the bottom of the Bollinger Band as well, which is interesting, shall we say. So still relatively well big, still above its 20-day moving average. 28,170 will be key interest and faith for today's close. Hope that answered your question. Is dollar going strong? Well, it looked like it, didn't it, last time we were looked. So let's have a look. Euro down again. Yeah, so that this is the 1 hour still, remember, guys. So yeah, euro Dollar's improved as the market has consumed those headlines, which were positive. There's probably, I haven't got my Bloomberg station on here at the moment, but probably say Larry Kudlow's probably out on CNBC and Bloomberg at the moment saying what a great, strong jobs report it is, all being analysed. The banking analysts are all out interpreting what's going on. But yeah, intraday, there's certainly short time, it looks like it's been seen as dollar positive. This is the 15-minute chart from when the data broke here. This is the 1530. See the big volatility, but we're edging down in the last 20 minutes since the 20 minutes, the last half an hour. We've moved to the downside. So dollar's down. Euro dollar's down. Euro yen's up to this 106.44. Cable will be down as well. I would guess there we are into S1 $132. CAD, and not so much because the CAD data was okay as well, but it's certainly up to the moving back to this upside. So there's a lot of this 5-minute chart to go to 15. So we're talking about yeah. So again, dollar benefit. So yeah, it's a dollar positive. NFP today, the headlines say were better. Unemployment, which significantly better than expected, 1.8% better than expected. The headline came in at 1.37 million, just under the expectation of 1.4 million. So still relatively strong. So next question, what's my take on gold? We talked about gold earlier, but let's have another. There's lots of you asking about gold, so. Let's have a look. That was about 10 minutes ago. Arumu asked about gold. So, as I said earlier, gold on the daily time frame. Everybody's saying, "What's your opinion?" Depends on the time frame we're talking about. Today, gold is edging lower. We're into this key 1920 level. Why do I say 1920s level is key? Well, this is why I say 1920s key. Because here on the daily time frame, we have a clear little support channel here between the blue line now. I hope you can see that. That's 1900, that blue line there. And this yellow number here says 1920, which is where we are now. So you can see we haven't closed under this since the big sell-off here at the beginning of August. Remember that Tuesday? August the 11th, when we sold off really aggressively. It was the worst year for gold in 7 years, but we've had it again, just like we had with the equity markets earlier. We've had a continuing rally from 1745 on the daily time frame for trend following traders. So big engulfing candle. We haven't broken out of that range since that massive sell-off in August, which is not a surprise particularly. But we have this support. So 3 days down now for the gold market, and we are testing this key 1920 level. So this zone is a bit of a buy zone, or has been a bit of a buy zone, but we could easily breach it and break out the bottom side. All support and resistance levels don't last forever, and that's the point of them. They get tested, and then they get broken, and support becomes resistance, and resistance becomes support. Here we are, daily time frame, gold chart, sliding sideways. We need to break out of 1995 and then 2000 if we're going to move higher, and we break below 1920 and 1900 if we're going to move lower. But at the moment, we're channel bound, going sideways. Amu, my friend, on gold. Gold going down at 1864. Absolutely, Abby. We mentioned this earlier, didn't we? That's that area. This is this 1864. This one here is the bottom of the Fibonacci channel. The day after the big sell-off, we spiked lower, and 1864 was a key resistance level as we were grinding up on the way up. So it's a key psychological number. The markets remember it. The trading robots remember it. So yes, 1864, 1865, absolutely correct in my interpretation of that as well, my friend. Fargo, will gold really seeing buying everywhere? I don't know what that means, Fargo. Great film, by the way, Fargo. Loved it. Great book as well. Great TV series, but the film was even funnier. Will gold really see buy everywhere? Well, we shall see. At the moment, as we got here on the daily time, we're consolidating, and we've been down all week. So where we finish the week, we shall see. The weekly chart so far, again, big move up, but again, consolidating from that early part of August and moving down. You can see the weekly chart. Obviously, this weekly candle this week isn't finished, but as you can see, it's been much more volatile this week than last week or the previous week. So we're airing to the low side at 1920. That's the real 1920, 1900, that T20 dollar support area that we've seen for August, but we'll see where it goes. Where is gold trending? Bright Global Marketing Official, my friend. Hopefully you've just been listening to what I've been saying on the gold market. A lot of interesting gold. That's very good. And again, I was speaking to somebody in South Africa earlier in the week, and I always say to people about, because lots of people ask me, what should I trade? What should I not trade? Well, if like guys in, wherever you are in the world, leverage your experience in life. Leverage either your work knowledge, your life knowledge. And I'm saying to this particular chap, South Africa is still a massive gold producer. It used to be the world's biggest gold producer, not anymore. But the gold mines in South Africa very, very key. Obviously, there's big problems in South Africa with regard to recession, and the rand's been weak, and obviously come back a bit as the dollar's fallen. But lots of turmoil, lots of obviously issues with the pandemic on top of everything as well. They're approaching spring, so they've been through their winter. They've started spring now as the northern hemisphere moves into the autumn months. So obviously potential, huge country with huge potential. But he was saying, I know about the gold mines, and I feel for it. Well, that's although the gold bullion and the mining doesn't have a direct impact on your CFD gold chart, there's obviously some quite significant correlation. So you usually leverage those what you know about. So as far as the trend's concerned, Bright Global Marketing, my friend, there isn't one at the moment. We're just, as I've just said, we're sort of consolidating. But consolidating at relative highs. These are traditionally or historically very high levels. If I go to the monthly chart, hopefully you can see what I mean. Up here at 1900, it's we're at these massive levels. This is the monthly chart. This takes us back to 2011 when we were at 18, that 1820 level that we broke. Now we broke even above that there. So we're at very, very high levels traditionally for the gold market. Doesn't necessarily mean we're going to have a massive sell-off either. Don't read into that, but monthly still bid. The 200, it's way overbought. You would argue that's the RSI in the monthly chart, but it's been overbought most of the year. The gold market, we're at 73. We're dipping down a tad, but we're still on to the upside. So as far as day is concerned, obviously that was August, so it's obviously a bit of a funny month anyway. But that's still what we're looking for at the moment. It's 1920, 1900. Support zone at the moment. Will it break? Will it not break? There we go. Aussie dollar, Martin, we did it before, I think, but I'm happy to do it again. Aussie dollar's been relatively well bid, and let's go to the daily time frame. Aussie has recovered remarkably from these lows down here at 55, 59 here. In fact, it's got lower than that, didn't it? Here, all the way down here at 55 here, the nadir of the pandemic. Back in March, and what a recovery, what a post-pandemic recovery we've had. So I don't know if you can see this, but you can see the green line here is the 20-day moving average. You can see we've been really above that. A bit of consolidation here in June and July, and then we just moved up again, and then moved up again, and so we've gone from 55, and we've tested 74. Huge move for the Aussie. A bit of cooling this week as the dollars come back to life. Many pundits are saying that this short term, this rally at the beginning of September won't last for the dollar. Many professionals have them still a lower rate from here, regardless of who wins the election. But anyway, 72.50 as far as intraday is concerned. Martin is the key support level today, but on the daily time frame, still daily time frame, we've had a nice run up. We broke out of that channel, we've run back, and we're back into that channel. See that 72.50? It's not there just because it's there. You can see it's the top of the channel as we were moving up. So 72, the round 72 is a key target level for many systems, a key level from previous last year as well. We breached it. We moved around. It moved around, broke out, and now we're coming back down to it. So the next move, we're either going to come back into this channel under 72.50 and test 72 itself, or we're going to bounce off that and move back up and breach 74. Obviously, we don't know at the moment, but at the moment, on this end of day, we're still, it's looking short. It's been down for 4 days now, but we're still above the 20-day moving average at the moment. So trade what you see, not what you think, Martin. That's what the technicals are telling me. I'm selling gold, hope I'm right. Mr. Babs. One word we don't use as traders, Mr. Babs, is hope. Okay? Get rid of it. Get rid of it out of your psychology. Trading is emotional anyway. Fear and greed are the two things that drives the market. But don't hope. Yes, you want it. You want to be right, don't you? If you're short, but don't get emotionally attached to it. So, trade with a target, trade with a take profit, trade with a stop loss. If your stop loss gets hit, that's too bad. If your target gets hit, that's great. Okay, and try and deal with both of them, and deal with them just like that. You've made a loss, never mind. You've made a profit, okay. Don't get too, down when you're losing. Don't get too over the top when you're winning. The key thing is to, when you do lose, you lose small. Let me just make myself bigger here. I'm doing on a bit of a hobby horse here. When you lose small, like that, okay? Where are we? There. Make it small. When you win as big as you want. Bigger than that, all the way out at the top of the screen. Keep the losses small, because that way you stay in business. You're not going to blow your account rate. I'm not saying that at all, but you stay in business, you get more experience. So, don't hope, Mr. Babs. If it hits your stop loss, you lose, but you lose a few percent of your account maximum. Okay, so there we go. Anyway, end of rant. So, gold has moved down, Mr. Babs, you're right. And as we just said about gold. Next question, what's gold doing? Sammy, we just talked about gold. Hope I've answered your question. Good afternoon. Hope you're still here. Yes, dollar is stronger, Chico. You're absolutely right. It's moved up. Where are we? We're now 45 minutes since the data came out. And, gold is... where are we? I've lost you. Gold is stronger, you're right. It's sort of improved. I'm selling gold. Am I good to go? Well, like we just said, Lal, depending on your time frame, this is the Aussie, but it's intraday. It's certainly under that. Let's just bring it back up again. If you're still here. Intraday, it's certainly moving down, and we've tested. But we've already tested this is the 1 hour time frame. And we tested this key 19, 20 level, so there may be some buys there. But as you can see, really on the 1 hour, again, depending on your time frame, my friend. We're really sort of going sideways. This was yesterday. Couldn't get over that Fibonacci level there at 1944, and this 1920 level. The Fibonacci levels, guys, is this from this sell-off we had, which I was talking about before. So we yesterday and today, intraday, we've been capped at that R1 level, which happens to be that 38.2 Fibonacci level through yesterday, Wednesday afternoon, and all of Thursday we couldn't get over it, and Friday we tested and moved back down to it. So we're airing to the downside on gold. All my friend. Next one. Ramazaman, what do you think about Nasdaq move? Should we sell or buy? Guys, I can't advise you what to do, but as we said earlier, the daily time frame remains okay, because we're still above the 20-day moving average. That's it. For me, that's just only my way of looking at markets. Is one I've always looked at, and it's just, I'm an old guy now, so it's just something that works. And it's been pretty reliable over the times, and many people look at that, the 20-day simple moving average or the 21-day exponential moving average. So as far as the Nasdaq is concerned, yes, we had that massive sell-off, and as I said, this big day there. See how it goes 1, 2, 3, 4, 5, 6, 7 days. Best part of 6 days up. That one, it didn't close below that, which is interesting. So. But we're moving down again today. So, that's all that last rally up. Is it a big last rally to the top? We don't know at the moment. Time will tell, but that's certainly a negative candle. But it didn't break under the 20-day moving average. So if you're a long-term trader, using the 20 days as your support, you might have moved out there, but it was only 1 day under. Then it went over, then it went under. So you just stack tight, because we're in this massive uptrend. Trend's been recovering. The tech stocks have been doing very well. The Q2 earnings were very good, and they keep going. So at the moment, it's still trending up on the daily time frame. Weekly time frame still looks very good, very positive, a bit overbought here. We're at 71 now, so it's come down a bit. So it's cooled a bit here on the weekly chart. Has that been the top? Again, we don't know. Week is still got the rest of the day, but as you can see, we've got a down week this week. But, we're still very much positive, still very much biased to the upside. There's the 20-week moving average. There's the 50-week moving average. And there's the 200-week moving average, all the way down to there at 7,200. And here we are all the way at 11,700. So massive, massive distance above our key moving averages. Are we too far extended? Well, possibly, but let the trend be your friend. There's nothing to say panic to get out of that yet. You could have put a little weekly trend line up there, put your weekly pivots on there, but that's still looking okay. Yes, we've had a down week, but that is trading, Ramazan. So again, I don't know what time frames you're talking about, but it still looks pretty okay to me. Time will tell if we suddenly crash through. Remember, markets tend to, as we see here, as I said earlier, markets tend to go up, come down quickly and go up slowly. Okay, Nasdaq's a bad example, but even so, it was, it went down that quickly and it took that level to get back to where it was, didn't it? And moved up. The others are much more of a swoosh, but we're way over our February highs now. The other markets less so, but it's because of the twist of the Nasdaq. So Nasdaq's still good on the way up as far as the trend is concerned. Motzi, is there a correlation between gold and the Swiss franc? And if there is, please explain. Yes, is the short answer. Motzi, both assets are deemed safe havens. Okay, what do we mean by safe haven? A safe haven asset, Motzi, is something that investors go to in times of trouble. So, like if there's a war, or if there's suddenly there's a political upheaval, or like like a prime minister resigning, like we had in Japan. Safe havens tend to get bought because they're less risky. So less risky things include gold, Swiss franc, the United States dollar as well, and things called government bonds. So that's why everybody talks about the yield on government bonds, because they're very, very safe. Bonds are what you do. You buy them. It's basically investing in a country. That's what bonds are. They're called different things in different parts of the world. But yes, there's a very strong or a very real correlation between gold and Swiss franc. The other thing about the Swiss franc and gold is that they are both safe havens, but obviously the Swiss are very, very independent nation. Remember, they didn't get involved in the Second World War, for instance. They're right in the middle of Europe, but they're not in the EU. They've still got the Swiss franc. Their banking laws are legendary. The secrecy, the private bankers of Zurich, the private bankers of Geneva. Although there's a lot of pressure on them now to be less secretive than they were, it's still a very, very highly sought after place for private banking, for private equity, and for safe investment. So Switzerland and gold have that correlation. And also Switzerland is a big holder of gold bullion as well. And lots of countries hold their gold reserves actually in Switzerland as well. Yes, there's quite a strong correlation between gold and the Swiss franc Motzi. And so if one goes up, the other tends to go up as well. All to do with this thing you'll hear about, a safe haven bid. As you see, Swiss franc. And the other thing, and the thing of peculiarity about the Swiss franc as well, remember, as far as just looking at the Swiss franc, they've got negative interest rates there. They were one of the first central banks to move to negative interest rates, which to me, as an old traditional understanding of an economist, it just seems crazy. Negative interest rates. I still haven't really got my head around negative interest rates, but they were one of the first to move. They're still very, very keen on them. Negative interest rates means basically that you pay the bank or the central bank by giving them your money. Normally it's the other way around, isn't it? When you put money into a bank or into a savings position, they normally pay you to keep it there. Here, they're trying to stimulate the economy out of the recession that we had in 2008, 2009, the great economic collapse. And so by doing that, they're trying to stimulate banks to lend money. That was the whole theory of negative interest rates. And Switzerland, Sweden, and the ECB as well, under Mr. Draghi, were all very key advocates of negative interest rates. Japan as well. But the UK, saying they're not going to do it. US saying definitely not going to do it. But we'll see. There's still time. Again, time will tell whether it's been a success or not. There's arguments on both sides of the argument, basically. But yes, very strong correlation between gold and Swiss Mozzi. I hope that's explained things well enough. Angela says she's buying gold. Very good, Angela. Are you trading gold, or are you actually buying the bullion, the asset itself? Different markets, but certainly gold has, as we saw on the chart, support at 1990 and 1920. But today it seems to be pressure. Remember, obviously, when you're trading assets like gold or oil or platinum or whatever it is, remember you're trading against the US dollar. Okay, as with any Forex trade or any CFD trade, it's a pair you trade. Remember, you're trading the difference between the two sides of the deal. So if one side's quite strong, which the dollar appears to be today on the back of the NFP numbers, the other side will tend to come under pressure, and that's what's happening with some of the assets. So if we look at oil, for instance, you would expect oil, and oil is under pressure from lots of other reasons. We had a big sell-off day before. Where's oil gone? You would expect that to be a bit under pressure, but oil may have got a bid simply because of the it's the wrong chart, that's why. So we'll have a final look. So now we're into NFP data today, and everything's sort of airing to the downside. So here we are. Gold did test that 120, big volatile hour before the NFP number. Let's zoom that up to the downside. Angela's obviously perhaps fancied the chances down here at this 119.20 on the lower time frames. You should see some sort of pin bar potentially. That didn't happen. 15 minute. Yeah, there's a big down move. 5 minute, a bit more. Yeah, there we go. That's a bit more forthright, isn't it? So it's still short, but bounced at S1 at 1920. So we did test S1. Now we bounced off it. It's 5 minute, but you'd like to see it back over 1930. It's going to move up any higher, wouldn't you? Round about here. But again, depending on your time frame, Angela, you might call it that bottom today for a little while anyway. But hopefully you got a target, you got a stop loss, and always manage your risk management, ladies and gentlemen. That's by far the most important thing in this crazy world we call trading. Shazad, what about pound dollar? Cable, what about it? What time frame, my friend? Let's have a look. So, as we said earlier, we've had a high this week here. We couldn't get to 134 again. We got to 134.85, this high here from, let's just stick that on there for a second. There we are. That's 134, it says 134.78 there. It was 134. Anyway, you get my point. We've had a high up here around 134.80 zone. Let's call it 134.80. And here on this trending strategy here on the 1 hour, see the first short was there as the moving average crossed here on at the beginning of the month. So we've had a strong dollar across the board for the rest of the week, basically. So that went short there, and it's moved down. That would have actually, you should take that out there, but there would be another chance to go short there. It's gone down again. It's come back up, close it short. Another opportunity to go short there yesterday, and that's moved down. It's closed you out, then short again there. It's closed you out, and then short again. So the support's coming up, but we're airing down. And as you can see, we've breached today post-NFP. We've moved below yesterday's low, which was yesterday's low. Thursday was lower than Wednesday's low, and Wednesday's low was lower than Tuesday's low. So we've gone low Tuesday, low Wednesday, low Thursday. Highs are getting lower as well. So we've got lower lows, lower highs. We've trended lower. We've tried to move up this morning before NFP over today's PowerPoint, today's pivot point at 133. We couldn't hold it, and we've moved down in the last 1, 2, 3, 4 hours now. And we're into our 5th hour down for cable. So that continues to track lower. Shazad, again, I don't know what time frame we're talking about. The 1 hour, as I said earlier, that would have triggered short again here. Using this crossing EMA strategy, very straightforward. A bit too simple, lots of people say. But It went short there because we're under the 5 and the 9 EMAs have crossed, and we've crossed under the 20 period there. But whether you would have taken that on the hourly time frame just before NFP come out, that's questionable. But we are at lows, and we've gone lower from there. So that would have been your, if you trade in all of these as they come, you would have gone short there at 132.60 or 132.59.8, and the ATR is about 24 pips. So you'd be looking for a move, at least one ATR, two ATRs with 48 pips. So 132.40, you've probably already got that. Yeah, 132.67. So we've already got 2 times the ATR on the 1 hour time frame. So it's already moved under S1. It looks like it's going to test 132. May get, obviously, likely to get some support. This big round psychological number, which we're literally running into at the moment as I speak, as you can see there. So it's likely to breach this level, because that's what they do. They don't stop these key levels. It keeps moving because the momentum's moving forward. As you can see, the MACD here, trading the MACD, it's been under the 0 line since Wednesday here. So that's been short, getting shorter, not so short, but then still short there. The stochastics is moving into the oversold zone, but we haven't turned up and out of it yet, so it's still got some momentum to move down. And RSI, the 14 RSI is at 31.50, and that's still got some momentum to move down. So it looks like 132 is certainly being tested, says that, on that 1 hour time frame. Hamad, I'm buying euro dollar. Well, very best of luck, my friend. What made you buy the euro dollar? Hope you got a system, hope you got a strategy, and the best of luck with that. 15-minute is still short by looks of things. Again, another one interesting that we just said that sterling was testing a key round number at 132.00. So euro is here again now, testing 118. So there we go. Hamad's a buyer at 118 by the looks of things, I would guess, and that sort of, you can understand that as well. Round number. We may overshoot again, depending on your strategy, Hamad. Are you, always, what's your target? How long are you holding for? Or have you just knee-jerk react to buy at 118 as it's moved down there? Hopefully you've got a strategy. Hopefully you've got an approach, because otherwise, emotions take over. You trade impulsively and just hoping for the best. And as I said earlier, we don't use the word hope when we're trading. Yazid, good afternoon, sir. Hope you're well, or good evening, good morning. I don't know where you are in the world, but Yazid, good afternoon to you. Hope you're well. Anything you want to have a look at, please let me know. That's what we're here for. Hamad's gone long euro here at this 118, I would guess. That's a 15-minute chart, 5-minute chart. Yeah, running out of steam, moving down, but still, 5 minutes still trekking lower. See how the 20 period, the 9 period, and the 5 period all still trekking lower. We haven't bounced that, so that's 5 minute is still moving down. Even the 1 minute, I guess it's 1 minute's consolidated. So we've moved down, consolidated, and that's moving down. So some support here at 118, quite possibly. So I've been talking for over an hour now. I've bored the pants off most of you, I would guess. And I'm getting all the questions still. That's good. If there's anything anybody else wants to have a look, please let me know. I'm going to wind you up in a minute. Let me just recap the main event of the day, which was NFP. Came in, relatively strong, better than expected. The headline came under expectations. There was an expectation of 1.4 million new jobs in the United States this month. It came under a little under at 1.37. Last month's was also revised down by about 30,000, but again, it's not a massive change. So it came at 1.734 from 1.763 last time. But the good news is really on the other side. The earnings was up significantly. The monthly earnings for August were up at 0.4 of 1%. Didn't sound a lot, but last month we were only 0.1%. From 0.2%, and the consensus was for no change, for flat, 0.7%. So there's a bit of a worry about the August data, but it's come in at 0.4% for earnings. That's good. The unemployment was expected to fall, but it fell much more significantly than expected. It was expected to fall about 0.4 of 1% from 10.2%. So it was expected to come under the psychological 10%. to 9.8%, but it came in at 8.4%, so 1.6% down from last month, and that hasn't been revised. The previous month hasn't been revised on that one, so that's quite a big tick in the box. The caveat for that is the fact that lots of temporary workers have been employed by the United States government for the 2020 census as well, which was delayed from earlier in the year. So there'll be a smidge in that. I'd like to see the detail of the data. I haven't obviously had a chance to look at that. I've been chatting with you guys. The other key positive tick for me was the U6 unemployment. It gets overlooked quite often, but it's the wider range of unemployment. That was expected to actually move back up to 17.3%, and it actually came down quite significantly. So from an expectation of a move up from 16.5% to 17.3%, it's come down to 14.2%. So both the headline unemployment rate and the wider U6 unemployment rate, both considerably less than expectations. And the average hourly earnings on an annualized basis have ticked up again to 4.7%. So that's quite a robust number. And again, as I said before, the administration will be spinning this quite strongly. Understandably, that's quite a relatively robust number for August, given the expectation that it was going to be quite weak. We have come in under expectations at 1.37 million as opposed to 1.4 million, but it's still quite a strong retrace. But as I say, time will tell how that all plays out moving forward to October. The last one before the election, the October number, will be very much in focus as well. We got obviously the Fed meeting as well. Next week we've got the ECB meeting as well. Will they be following the Fed with letting the inflation rate run ahead? More to play next week as well. So a very interesting week next week as well as obviously the key week we've had this week with this NFP data. The weekly jobs claims still are back under 1 million again, but still 880,000 Americans claimed unemployment for the first time this last week. So it's still a very, very big stubborn number. Yes, it's been coming down since the hiatus of 6 million a week at the end of March, but it's still a huge number for the American economy to absorb. And then there's this idea, then there's all worry about the Democrats and Republicans can't agree the next fiscal stimulus. Support, when additional unemployment support has evaporated, stopped from the end of July. So there's lots of questions of evictions, rented evictions, people not being able to pay their Medicare and stuff, and their Social Security. So it's an ongoing issue, and obviously undermining all of that, underpinning all of this is obviously the election campaign, which is getting into full tilt now. It's 8 weeks on Tuesday to election day. So that very much playing out, and both parties will be taking their spin on these economic numbers. Obviously, the president will be looking to reiterate his performance before the pandemic, and Joe Biden, the vice president for Obama, will be looking to obviously undermine those datas as well. So there we go. Martin's asking, how do we use envelopes to trade? Are they similar to Bollinger Bands? Envelopes, yeah, Bollinger Bands, Kettler Bands. They're similar because by their very nature, they're engulfing, they're enclosing. Obviously, the beauty of Bollinger Bands, Martin, is they're very much deemed volatility, and they're great for measuring the volatility. That's why they expand and contract as the candle size contracts. As you can see here, and when they pinch in, that's a particular opportunity sometimes. Under the midline, go short. Over the midline, go long. Obviously the other thing with Bollinger Bands and envelopes, they can trend as well. So that's very much going down. Here, we've constructed volatility is reduced very significantly here, but we're going sideways, so there's no direction. And you can see that with the price action as well. So, and the beauty of them, all these indicators, is they're applicable. They're as applicable to the 1 minute time frame like we've got here. You'd say exactly the same, describe the same thing here on the 1 minute time frame as you can to the daily time frame. So it's the same asset but a different time frame. And the Bollinger Bands here are sloping up and going up. So, and you'd see there's a bit of a zone, bit of a consolidation on this particular asset. I don't even know what it is, euro dollar. on the daily time frame. So yes, envelopes are very similar to Bollinger Bands, Kepler channels, lots of other channels of ways of trading as well. So have a look at them all, mine. Have a look at our webinars on how to trade all these indicators. And any questions, please email us. Please let us know. Best way of getting hold of me is webinars@hotforex.com. It's probably the quickest way of getting hold of me because my personal inbox just gets chocked up. I'm sure you'd appreciate that. So webinars@hotforex.com if you want some more information on envelopes. If you can't find them on our webinar page where all the education pages are. Olufemi, how is the non-farm payroll affect trading? Well, Olufemi, non-farm payroll is basically what it says. It's the jobs numbers, number of jobs created in the American economy. It's measured by the Bureau of Labor Statistics Services. Every month they publish it. So they publish the unemployment rate, they publish the number of new jobs, they publish the participation rate, i.e. how many of the people that are still looking for work are actually in work, doing work. And it's a key indicator for the strength or weakness of the American economy. And that that therefore impacts everything else that's reflected in the American economy, like demand, like consumer spending, and obviously like the US dollar as well. So we've had a relatively positive NFP data today. The headline was a miss, which is why we got that volatility in the first few minutes as we rallied here. The euro rallied to 118.54, but immediately, this is the 5-minute chart for the euro. Immediately we've tricked down ever since and tested the key 118. So a big, whatever it was, where we were about 118.42, so about 40 odd pips to the downside has been available so far today since NFP. I forgot what I was going to say then. What was I going to say? So I say the headline was a miss, so therefore the dollar came under pressure instantly. But then when you looked at the other data, it was actually quite strong with this big, significant beat for the unemployment rate. So how long that lasts for or not, we shall see. Because as I've been saying for weeks and months now, unemployment is one of those really sticky things that can be very difficult to shift. So we'll see if these are real jobs, what the impact has been of this of the census employment, how weak the hospitality sector is being. There's lots of talk as we come to the end of the summer period in the Northern Hemisphere, lots of layoffs, furloughed workers, people being made unemployed in the airline sector again, lots of airlines under pressure as well. People aren't flying again, certainly intercontinentally, internationally. So again, it could be a very sticky autumn and winter time for the Northern Hemisphere with regard to jobs. But, it may not as well. So we'll just see what we see. Trade what you see, not what you think. And euro again, testing 118 as I speak. Good afternoon or good evening to Thailand, my friend. Hope you're well. And I'm going to call it a day now, guys. I've been talking for over an hour. I'll leave Olufemi's number on as we've talked about non-farm payroll. Does it mean non-farm payroll comes out this time? Here we go. Does it mean non-farm payroll comes out this time every first Friday? My first trading, my friend. Yeah, normally yes. Not you can't. Most months, probably 9 or 10 of the 12 months of the year. It's the first Friday of the month, and it's always at 8:30 New York time. So it's always 12:30 GMT, either 3:30 or 2:30 server time, depending on if we change the clocks here. But in Europe, so depending where you are in the world. I don't know where you are in the world, Aditembo. It's always on. It's always, as I say, typically it's the first Friday of the month. You can normally set your clock by it, but not always. It's one of those rules that can be broken. But it's always at 8:30 New York time as well, or Washington time, because it's obviously the data that comes out of the Bureau of Labor Statistics in Washington. So thank you all for your time. If there's any final requests for any final assets, I'll leave you with The euro going down, dollar yen going up, 160, can't get to the R1, and cable presumably going in the same direction as euro, going down indeed under S1 and tested 132. So cable's tested 132, euro's tested 118, and dollar yen is holding over the key 106 and having a go at 106.50. Gold, as a lot of you asked about gold, let's have a look. Gold now tested that key 1920. It's a 15-minute chat. Just go back to the 1 hour timer. Tested that key 1920 area, and we're back at 1927 at the moment, but under today's pivot point, which sits at 1934. So thank you for your time, everyone. I hope that was useful. Join me again, and Andrea, we'll do these live these live broadcasts around major events. Obviously, NFP is perhaps one of the major events of the month, I should say, not the year. Very volatile. So take care, and we'll see you all again soon. All the best, everyone. Bye-bye.